Welcome, ladies and gentlemen, to Freedom for All, your trusty channel when it comes to financial education. However, I'm not a financial advisor, so please do your own research. Alright, today's topic, fundamental versus technical analysis. There's actually a lot of discussion between fundamental and technical analysis, so I've decided to make a video on fundamental and technical analysis. This is actually a two-part video. I did the first part last week when I talked about the fundamental analysis, and today we're going to talk about the technical analysis. So if you haven't seen that one, please go back, watch it, and then you can come back and watch this one on technical analysis. And before we get going, please make sure to sub to the channel and ring the bell. Thank you. Alright, next up, technical analysis. So here we got the chart for Apple. You can pretty much sort this by day, week, month, 30 minutes, even in a minute. So if you want to do day trading, you can do that as well. But you're going to look at the technical analysis of the chart. So you look at the chart and you try to find patterns, and then you say, okay, is it worth it for me to buy the stock right now, or is it worth it to me to sell it right now, or to hold, or what am I going to do? Okay, one interesting part or one interesting line to look at all the time are the straight numbers like 160, 70, 80, 90, 200. And what you can see right now, if I just put like some horizontal lines in here, for example at 180 is a nice line right here. And if we're going a little bit to the left, so looking at the past, you can see that we are approaching here 180, and then at 180, which is the round number, it pretty much reached the all-time high, which is almost like it already reached like an all-time high over here, as you can see if I scroll all the way back. So we pushed up to the all-time high, retracted a little bit, pushed up again to the all-time high 180, and then it failed and people just sold off the stock. Okay, but what you can see already here again, if I put in another line right here, like around there, you see here the spikes and then here the bottom out. So you put this right here and you can see here it bounces again, and then on the other side it failed through here, so this wasn't really a good support, but again it floats around here, this number, and then from here on up it goes up. So now if you sold at 180, okay, you can imagine, or you could look at this chart and say, okay, I draw my line over here, and now by prediction it should either stop here, or it should stop here, or right there, because there was a bottom, or then it could stop here. And I'm actually going to draw this line as well, because this was the last low pretty much right there. And you can see already what I want to show you here, but we get to this in a minute. You can see here danced around this number as well, and then here as well, and it's like not exactly at 140, so it's more like 141, 143. So again, like the stock bounced at 180 and then went down, and now you could have predicted theoretically that, okay, when is it gonna bottom out? It's probably gonna bottom out somewhere around 155, 65. What's also always interesting to see in these kind of situations, you can see here then there's a strong sell-off. The red lines always mean the sell-off, the green lines mean the buy. Then there's a strong buy because people were guessing the support, and then the sellers, the guys who try to push the stock down, try to break it down. However, then it was bought up again, so it was holding the support. So once it becomes a resistance, which means the stock can't go over, and on the other hand, it becomes the support. That means the stock won't go under, or probably not under. You can see here's another line, another support. Then it went up again 180, and then here you can see this huge spike right here, where it went from, and we can look at this as well, with the info line. Let's say from here to here. See, this is 3% within a couple of days, which is for a large stock like this quite huge actually. Because again, we approached the 180 line, which is the upper support, that was the last all-time high. And then once you go over the 180, then people just go crazy and say, okay, I got my buy-in, so the point where I buy my stock, I have registered, so now I'm gonna buy in when it goes over 180, and that's when people start buying, and then you can see like this huge volume going in and the stock being bought up and going actually over the all-time high. And now that's the next point that you look at is, okay, what's the stock gonna do next? Is it gonna fall down under the 180 line again, or is it gonna stay? So you can see here now the 180 actually is like a support because it doesn't fall underneath it. So now the resistance, which was being resistance, now becomes the support. And then you can say, okay, now I will buy here because even if it falls and I buy at 185, let's say, it's probably not gonna go down. Probably, I say, because in the stock market nothing is really predictable. The stock can do three things every day. It either can go up, down, or stay at the same level. So this is the possibilities every day pretty much. So like the last all-time high we had right here, I'm gonna put this line in here as well. It's not gonna show us anything, but I'm not gonna go with the all-time high because this is just like when everything's going crazy, but we're gonna go with like here. This might be, oops, 229. Yeah, let's look at this. So then again, we had some sold off again because we reached all-time highs. Then there was probably here some earnings report, which was not so good. Surprise, this was actually good. So usually this should mean that the stock would go higher because the estimate was 2.79. However, there were higher earnings reported, so this should have gone actually up. And as you can see here, it probably did a little bit, but yeah, probably people took the dividends and then sold the stock already, which can happen. And then again, a lot of sell-offs. What was here? November 18. End of the year. Okay, end of the year, usually a lot of stocks get sold anyways. So, and that's what I said, like this is technical analysis. Yes, you can look at this and you can try to find lines. However, it's never certain. But what we have found here now, if you look at this right here, the line on the bottom, you remember, I scroll out a little bit. Ding ding. So we came here down and now we look at the support right here, which was the last low at 141. So now you could have expected that even with the huge drop from 229, from 230 all the way down to 140, you could have said, okay, down to technical analysis, it should have stopped here. And you see like it crashed through a little bit, then it got up a little bit, so it stopped a little bit. Then the next one should have been here, and here again, like it fell through, it went up again. So this means usually that there's a fight around that mark. But it couldn't even hold this. It crashed again a little bit more. But then this last support right here actually was holding up. And then from here on out, we went back up again. And then on the other side, you see the other resistance again. Again, support when it goes down. Resistance when it goes up. So we go from the support now to the resistance, fight a little bit around it, go over it. And then once you break this, there's pretty much open upwards. So once you get over this line, the next support or the next resistance would be up here at 180. So if you would have bought even at 165, that would have been a nice gain for you going up to 180. And actually reached higher all the way up here again. And you see we don't have anything here. However, there's a little fight here as well. So you could have said, okay, maybe this is gonna stick for a little bit. Fell through again, didn't hold this support, went down, but almost back up to that line here again, rebought. And if we set this a little bit more downwards, no, it doesn't reach it, because I would have thought maybe it was holding this line over here, but it's just a little bit below. So there's like at 180, it's like a fighting zone for the bulls and the bears. So however, once we got over this again, now we got up again. So if you're thinking about now, and this is what I use technical analysis for, to be honest, if you're thinking about now, should I buy at the current state, yes or no, or should I sell? And as you can see, we are approaching pretty much the high of 200 we already crossed, because the 200 mark is already the rounded one. We already crossed that one. And now the next one to reach would be somewhere here probably, which is 210, sorry. So 210. So yes, the stock can go up to 210, but it could as well, which is more probable, could go to 180 again. Okay. So what are my risk versus reward? My risk would be from 205 to 210. Yay. On the other hand, the risk would be from 205 to 280. Okay. So yes, I could take these $5 per share right now, but I could also lose the $15 right here. Okay, so this doesn't seem like a good trade for me. So what I would do is actually I would wait and see what it's gonna do at 210, because I can resist the $5 gain that I get here. Okay, they also have the earnings report on 30th of July, as we saw earlier on the website as well. So you might want to wait for this. Usually before earnings the stock go up, and then after earnings they might go down. However, Apple just does whatever they want. Usually when they report good numbers, the stock goes down anyways, and if they report bad numbers but they have some kind of special information in their press release, the stock goes up. So the Apple stock really does what it wants anyways. So for me, probably right now just look and see what's going to happen. Sometimes in the stock market it's best to just hold the cash and not invest actually. So we will see if this can push up and then go over the 210, and then if I go in at 210 or a little bit over 210, then again I will set my stop loss, which means the risk of losing money, and I will do another video on this as well. Right here at 208 probably, to make sure that once it falls under this 207 probably. So once it falls down, yes, I still lost a little bit, but if it crashed then even further, I'm gonna end up here, and then I have a huge loss. So for me, the risk reward right now just not worth it. But once we have good earnings reports, or we see that the stock is driving up towards the 210 or over the 210 even, I actually might get invested. And now a lot of people say, well, why would you get invested when the stock is at an all-time high? That's a stupid thing you can do. Yes, sometimes it is, but sometimes you can see it just goes all-time high, it drives back a little bit, all-time high, drives back, all-time high, and then it really breaks out. Yeah, and you can see that over and over in the chart. If you're going back in the history, you can see here all-time high, back a little bit, all-time high, drive back, and again this is your stop loss support where you have to check. Goes up again, all-time high, breaks the all-time high, and then from there on out just moves up. But this everybody has to decide individually for themselves. Okay, I can just explain to you what technical analysis is in a little bit. There's a lot of more information in here. Obviously you got RSI, you got MACD, you got your moving average, you got your volume, you got your EMEA, you got your VMAP. Just another tool I can show really quick. You got all these tools over here. So there's a lot of information that you can get from the chart and that you can try to read into. However, at the end of the day, this is technical analysis, and you have to decide for yourself what you prefer. So if it comes down to fundamental versus technical analysis, I hope I could show you a little bit what the differences are, what you have to look for. There's a lot to talk about in technical analysis, and yeah. However, you have to decide for yourself what you want to look at. To me, honestly, I think the best is a combination of both. If you look at the fundamentals, see how the company is performing, but then look at the technical chart and say, okay, does it make sense for me now to step in or don't step in? For example, if I'm looking at the quarterly numbers for Apple, I can say, okay, have they performed better or worse than the last quarter in the same period? And what is the prediction for the mid-year review? And then I look at the chart and say, okay, but right now, actually, even if all lights are standing on green, to me the risk reward right now is just not worth it. I'm gonna wait a little bit, and then I'm gonna go into the market. And this is always your decision to make. You have always the chance to wait. You don't have to buy immediately. So make the smart decision, think about it, and then go in or out. Okay guys, I hope you enjoyed this video from Freedom for All. As always, if you're new here, please subscribe and ring the bell, because I'm quite new here as well. And I will leave you with my mantra as always: dream it, love it, live it. Freedom for all my friends. Take care, have a good day. See you, bye.